Hey guys, Okana here. We're going to talk about currency correlation, how to predict the future. Sounds interesting, doesn't it? I mean, if you could predict the future outcome of an asset, you would make a lot of money, right? Well, there is somewhat a way you can do that, and correlation is what it is, which means that two or more assets can be in correlation. Like if one asset is moving up, the other one might also move up, or if one is making a double top, the other might do a double bottom, which is called mirroring, which is a perfect condition. I'm going to show you examples of that as well. And those are techniques I use on a daily basis. Actually, that's why I look at multiple assets when I trade, so I can take advantage of currency correlation. So there are several types of correlation, like positive correlation. Both assets are going the same direction. So if one is going up, the other goes up. If one breaks out, the other breaks also. And then there is negative correlation, which means that if one is going up, the other is going down. I'm going to show you that as well. However, you should know that correlation isn't always immediate. As you can see here, for example, this is called the positive correlation. You see both were trending up and then came the breakout. Same here. So USD JPY 4 hour, Aussie 4 hour. Not that the time frame matters really in this case, but nevertheless both are on the same time frame but two different assets. So the common denominator here is the USD. So both have one asset in common, and that's the reason for the correlation here. So you can see that both broke out and then both retraced back to the line they broke out from, right? However, if you look at the time, you will see different times here. You look at the breakout here. When did the breakout finish here? On 26th, and this bullish candle was 26 8 MetaTrader time. Here you can see it was the same day, 4 o'clock, and then 8 o'clock was the retracement. Here you can see 8 o'clock price was just falling. So basically the USD JPY was following the Aussie, right? Because the breakout here actually happened pretty much the night before. You can see that on the 25th. So the day before, during the night there, you got the breakout, and then came the fall later during the morning of 26th. But here you can see the breakout came when the Aussie was retracing. So here we have actually, what you can see is that in a way, if you look at the delayed correlation, we would call that a positive correlation, because this one is doing what this one did just 8 hours ago. But also you would also have negative correlation at the same time, because when this was retracing back up to the line, this one was just breaking it. So you can see two assets can be both in negative and positive correlation. So you have to take those patterns into consideration, look back and see if there is some delayed movement. And you can see here the retracement point, the breakout point. So the price was stepping down, broke out, retraced back up. You can see the same pattern here as well if you would draw a trend line. So again, you see here the breakout was actually much earlier. The first breakout from the first trend line was 25th. So during 25th, price was still moving up on the USD JPY. So you can see correlation is kind of complicated. You have to look at these patterns to see. So one more time, just to conclude this, you have here positive correlation, but also since the correlation is somewhat delayed, you can also get negative correlation. So that depends on how you want to trade. So for example, when you saw the Aussie start moving up, you could estimate that probably USD JPY will now break, and then when the when the Aussie retraced back and was getting down, then you would know that okay, it's time for the USD JPY to now retrace back to the line. So you can see the delayed movement here, and you can count the candles, see how much delayed it is. Of course, you should use it with price action, not just jump in, because one is going down, one is going up. Now I'm going to show you negative correlation, a good example of that, which I call mirroring, when the prices are pretty much mirroring each other. And those are the ones I usually take advantage of on the lower time frames, because it's more immediate. Okay, so it's not delayed. So these are the delayed ones that I showed you on higher time frames, can be used for higher expiries. Now let's look at this more immediate correlation. Look at these two charts. I used white color because I don't want you to look at the colors of the candlesticks. I just want you to look at the picture here. You see, it's like almost like holding a mirror down here, which means that you get the reflection backwards, inverted reflection. You see here, you got the prices moving down, and then you got the prices here also, see, and then came the break, big break. So this is a large movement down. You can see that here on the colored one, large movement, large drop. So we got the large drop, but here we got the large movement up, right? Look at the blue ones, large movement up. So now if you look at just at the colors, you will see the correlation here. One broke down, right, the breakout, and the other one actually broke up. So this is the 5-minute chart. This happened pretty much within minutes of each other. We can look at that actually. You can see the first candle that closed below the trend line, 26, 22.55, which was on this candle. So this one started dropping, then you would know, okay, the other one is also gonna go the opposite direction, is gonna go up. So these are the types that I like to use because they're, as I said, they're immediate, they happen faster. I don't have to wait 4 hours, and it's immediate correlation. It can be positive too, like one of them is breaking a resistance and moving up. Then if I have another asset with positive correlation, I would know, okay, this one is also likely to break. But again, use price action, use your own strategy as well. Don't just jump into correlation trades, because it's just one type of confirmation. It's not always 100%. So sometimes charts can be neutral, like not follow each other at all, not invert each other at all for some time, which could also be a delay. We have a good article about this on binaryoptions.stock.com. You can browse through it. You can see also which assets are correlated, so they're explained here in much more detail. Here we have, I think there was a link here as well about correlation. You can follow to know exactly which pairs are correlated as described here, and also how to trade those are also explained here in this article. So I put the link below in the description. I hope you liked it. Please don't forget to subscribe and like the video. See you next time.